welcome to the Deep Dive. You know, the way we work in the U.S., it's really changing, isn't it?
Oh, absolutely.
And a huge part of that change is this explosion in the number of independent contractors, the whole gig economy thing.
Yeah, it's massive. And it affects almost everyone now, whether you are an independent contractor, maybe freelancing, or if you hire them for your business.
Or even if you're just curious about where work is headed.
Exactly. And understanding this stuff, the classification, it's really crucial. Getting it wrong can cause, well, major headaches, legal ones, financial ones.
Right. So that's our mission today, isn't it? To try and untangle this regulatory maze around who counts as an independent contractor.
And what that actually means day to day. Because it's not just about words on paper, like a label.
No, definitely not. The difference between being an employee and an independent contractor that has huge implications. Taxes, benefits, legal protections.
Everything. And it's complicated because, well, there isn't one single rule book. You've got federal laws, state laws, different tests.
And the label itself doesn't decide it.
Precisely. It's all about the actual reality of the working relationship. The substance over the form, as they say.
Okay, so let's start with the basics then. When we say independent contractor, what's the core idea?
Well, at its simplest, an independent contractor is someone who's self-employed. They're hired based on a contract to do a specific job, deliver a specific result.
Okay.
The key difference, the thing agencies look at, is control. The company hiring them generally controls the outcome, what gets done but not how it gets done, the means and methods.
Right, so focus on the what, not the how. How's that different from a regular employee then?
With an employee, the employer controls much more. Not just the result, but the details. How the work is done, when it's done, maybe even where. Think about training, set schedules, equipment provided by the company.
That kind of direction.
Exactly. More direct control over the process itself.
So it really matters what's happening on the ground, not just what the contract might say.
Absolutely. Government agencies, the courts, they look past the labels. They want to see the real substance of that relationship.
And this substance has big consequences, especially, I imagine, with taxes.
Or definitely. Taxes are a huge one. For independent contractors, the burden is entirely on them.
You mean?
Meaning they have to calculate and pay their own income taxes, federal, state, local, plus self-employment tax. That's the big one.
Self-employment tax, that covers Social Security and Medicare, right?
That's right. And they have to pay both the employee and the employer portions. It adds up quickly. It's a significant administrative task, too, keeping track of income, expenses, making quarterly payments.
Wow, okay. Compared to an employee?
For an employee, it's simpler. The employer withholds income tax, Social Security, and Medicare from their paycheck. And the employer pays its own matching share of those Social Security and Medicare taxes. So you see, that control aspect directly impacts who's handling the tax side.
So who typically falls into that contractor category? You see doctors, lawyers.
Yeah, often professionals in private practice, doctors, lawyers, accountants, also many construction contractors, freelance writers, graphic designers, lots of fields.
But the key is that genuine independence has to be there.
Absolutely. If it's not, and someone is misclassified, they could suddenly find themselves responsible for all those self-employment taxes they weren't expecting. A nasty surprise.
Okay, so who makes these rules? Where do these distinctions come from? What's the regulatory picture look like?
Well, at the federal level, you've got a few key players. The Internal Revenue Code, the IRC, is obviously huge for the tax side of things. The IRS cares a lot about proper classification for tax collection.
Makes sense.
Then there's the Fair Labor Standards Act, the FLSA. That's the big one for wage and hour laws. It defines employee for things like minimum wage and overtime pay.
Protections that independent contractors generally don't get.
Correct. And other laws can come into play too, like the National Labor Relations Act for union rights or ERISA for retirement benefits. They might have slightly different definitions depending on the context.
It sounds like a patchwork already.
It can be. And adding to that, there was a significant development recently. The Department of Labor, the DOL, issued a new final rule in January 2024. It actually just took effect in March 2024.
Okay, a new DOL rule. What's the significance of that?
Well, this rule changes the guidance specifically for classifying workers under the FLSA, the wage and hour law. Importantly, it got rid of a rule from 2021 and brought back what's called a totality of the circumstances analysis.
Totality of the circumstances,
Yeah.
meaning?
I mean, they look at everything, the whole picture of the working relationship, weighing multiple factors together, rather than focusing heavily on just one or two core factors like the 2021 rule did.
Interesting. So more factors, a broader view. And what about the states? Do they just follow the federal lead?
Not necessarily. States can, and often do, have their own tests. Some states, like California, for example, have adopted something called the ABC test.
Yeah, the ABC test.
Yes, and it's generally seen as much stricter. It makes it harder to classify someone as an independent contractor compared to the federal tests.
Wow. So a business operating in multiple states could face different rules in different places.
Absolutely. They need to comply with the federal rules and potentially several different state rules. It adds layers of complexity for sure. And this recent DOL shift back to the broader test just highlights how much this area is under scrutiny. It's dynamic.
Okay, so we have the IRS and the DOL, both involved, possibly looking at things slightly differently. Let's unpack their main tests. First, the IRS common law test. What's that focus on?
The IRS test really boils down to control. How much right does the company have to control what the worker does and how they do it? They group the factors into three main categories.
Three categories. Okay, what's the first?
Behavioral control. This looks at whether the company has the right to direct and control how the worker does the task. Things like giving detailed instructions, providing specific training, setting evaluation methods.
So managing the process?
Exactly. The more detailed the instructions and supervision, the more it looks like an employee relationship.
Makes sense. What's the second IRS category?
Financial control. This examined the business aspects of the worker's job. Does the worker have a significant investment in their own equipment or tools? Are their business expenses reimbursed? Crucially, do they have a real opportunity to make a profit or suffer a loss based on how they manage their work?
The risk and reward element.
Yes. Also, how are they paid? A regular salary points towards employee, while payment by the project suggests contractor. And are they free to seek out other work in the market?
Okay, so behavioral control, financial control. What's the third?
The relationship of the parties. This looks at how the worker and company interact. Is there a written contract defining the relationship? Does the company provide benefits like insurance or paid time off?
Employee-type benefits.
Right. How permanent is the relationship? Is it indefinite or for a specific project? And how central is the worker's service to the company's main business?
Got it. So the IRS used to have like 20 factors. Now it's these three buckets.
Pretty much. They streamlined it into these broader categories, but the underlying principles about control and independence remain key.
Okay, that's the IRS view. Now, the DOL and their economic realities test, what's the core idea there? Is it different?
It is different in its emphasis. While there's overlap, the DOL's economic realities test, used for the FLSA, fundamentally asks, is this worker economically dependent on the potential employer for work, or are they genuinely in business for themselves?
Economic dependence versus independence.
Exactly. If they're dependent, they're likely an employee under the FLSA. If they're really running their own show, taking risks, marketing themselves, they're likely a contractor. The new DOL rule highlights 6 factors to figure this out.
6 factors now. Okay, what are they focusing on?
First, opportunity for profit or loss based on the worker's own managerial skill. Can they make more by being smarter or more efficient, or lose money if things go wrong?
Okay.
Second, the investments made by the worker and the potential employer. Who's putting skin in the game for tools, equipment, space?
Right, the capital investment.
Third, the degree of permanence in the relationship. Is it long-term, continuous, or short-term project-based?
Permanence. Got it.
Fourth, the nature and degree of control. This is similar to the IRS's behavioral control, but maybe with more focus on the employer's power to control, even if not always exercised.
Interesting distinction.
Fifth, how integral is the work to the employer's core business? If the worker does something absolutely central to what the company does, it leans towards employee.
Okay. And the last one.
Sixth, the worker's skill and initiative. Does the job require specialized skills? And does the worker use those skills independently in the market, perhaps working for multiple clients?
So again, no single factor decides it.
No, just like the IRS says, it's the totality of the circumstances. You weigh all 6. But remember the legal context. This is for wage and hour law, so that economic dependence question is really front and center for the DOL.
And this is the approach the DOL went back to with the 2024 rule.
Yes. They moved away from the 2021 rule that tried to prioritize core factors like control and profit loss opportunity and returned to this broader 6-factor balancing act. It shows how unsettled this can be.
And we still have those state tests like the ABC test, potentially adding another layer.
Exactly, which often makes it even harder to be classified as a contractor.
Yeah.
Basically, the more it looks like the company calls the shots financially and behaviorally, and the more the worker seems like just part of the regular business operation, the stronger the argument for employee status becomes.
Okay, we've defined the terms, looked at the tests. Let's talk consequences. What happens if a business gets this wrong? If they misclassify an employee as a contractor?
The consequences can be severe. Yeah. Really severe. Financially, first off, they can be hit with back taxes. We're talking unpaid income tax withholding, both shares of Social Security and Medicare taxes, plus penalties and interest, which can pile up fast. Then, under the FLSA, they could owe back wages, minimum wage, and overtime pay that the worker should have received as an employee.
So unpaid wages on top of unpaid taxes.
Correct. And potentially the value of benefits the worker missed out on: health insurance contributions, retirement plan matches, paid leave. It can become a huge financial liability.
Wow. It really underlines why getting it right is so important. Any other risks besides the financial hit?
Oh yes. There are civil penalties that agencies can impose. And significantly, workers themselves can sue. They might file lawsuits claiming they were misclassified and are owed back pay, benefits, damages.
Lawsuits. That sounds expensive too.
Very. And to give businesses a way out if they realize they've made a mistake, the IRS actually offers a program, the Voluntary Classification Settlement Program, or VCSP.
VCST.
Yeah, it allows eligible businesses to voluntarily reclassify workers as employees for the future and get partial relief from those past federal employment tax liabilities. The fact that such a program exists really shows how seriously the IRS takes misclassification.
It sounds incredibly challenging for businesses to get this right every time. What makes it so difficult? Where do the ambiguities creep in?
Well, a big part of it is just how fact-dependent these tests are. You're weighing multiple factors and they might point in different directions. It's rarely crystal clear.
Like a balancing act.
Exactly. That control factor is often really fuzzy. How much direction is too much? Where's the line between setting quality standards and controlling the work method?
Yeah, I can see that being tricky.
And then you have the gig economy platforms and new business models that just don't fit neatly into the old boxes. Plus, navigating the different federal and state rules we talked about adds another layer of complexity.
Right, especially for companies in multiple states.
And ultimately, there's a degree of subjectivity. Businesses want flexibility. They want specialized skills, maybe lower costs, but they also need quality and reliability.
Right.
Trying to achieve that balance without tripping over the classification rules. It's tough.
So, given all that complexity and risk, what are the best practices? What should businesses be doing to stay compliant? If you're, say, a small business owner listening, what's the practical advice?
First and foremost, do a real honest assessment. Look at the whole relationship using both the IRS and DOL criteria. Don't just slap a label on it.
Go beyond the surface.
Absolutely. Second, use clear, well-crafted, independent contractor agreements. Define the scope, deliverables, payment, and crucially, explicitly state the independent nature of the relationship.
But the agreement isn't enough on its own, right?
No way. The reality has to match the paper. Businesses must avoid acting like an employer. That means limiting control over the how, the schedule, the location as much as possible.
Let the contractor be independent.
Yes. Ensure they have a real chance for profit or loss. Encourage, or at least permit them to work for others. Document everything why you classify them that way, the factors you considered.
Keep records.
Definitely. And review classifications regularly. Things change. Job duties evolve. Don't just set it and forget it. Train your managers and HR folks on these rules too. They're often on the front lines.
Good point.
And be wary of easy outs. Just because someone has incorporated or you use a leasing agency doesn't automatically shield you if the underlying relationship looks like employment.
So no silver bullets.
Not really. And honestly, if you're unsure, get legal advice. Seriously. The potential cost of getting it wrong is far greater than the cost of getting good counsel up front.
And always check state laws too.
Always. Federal and state takes a proactive, thorough approach.
Okay, it sounds like there are definite advantages for businesses using contractors, but also risks. Can you break down those pros and cons from the company's perspective?
Sure. On the plus side for businesses, cost savings are often a big driver. Avoiding the cost of benefits, health insurance, retirement, paid leave, and employer-side payroll taxes can be significant.
Yeah, that's tangible.
Access to specialized skills is another big one. You can bring in experts for specific projects without hiring them full-time. Flexibility is key to scaling your workforce up or down quickly based on need. Right, and generally less administrative overhead for payroll and HR functions. Onboarding can be faster too.
Okay, those are compelling benefits. What about the downsides for the business?
Well, Less direct control is the flip side of flexibility. You can't manage contractors the same way you manage employees. You might see less company loyalty. Their focus is their own business. The big one, as we've discussed, is the risk of misclassification penalties, back taxes, lawsuits.
That looms large.
It does. There can also be potential liability issues, say if a contractor gets injured on site, depending on the circumstances. And sometimes wrangling intellectual property rights created by contractors can get complicated.
So definite trade-offs for the business. Now let's flip it. What about the individual worker? What are the benefits and drawbacks for them working as an independent contractor?
For the worker, the biggest draw is often autonomy. Control over your own work, your schedule, your location. Flexibility is huge for many people.
Being your own boss.
In many ways, yes. There's potential for higher earnings, too, if you can command good rates for your skills. Tax deductions for business expenses can be an advantage, reducing taxable income.
Okay.
And the variety working on different projects for different clients can be really stimulating and help build a diverse portfolio of experience.
Sounds appealing. But there must be downsides, too.
Oh, absolutely. Major ones. The lack of a safety net is probably the biggest. No employer-sponsored health insurance, no retirement plan like a 401k match, no paid sick days or vacation.
You're on your own for all that.
Completely. Income can be unstable, fluctuating from month to month. There's very little job security compared to traditional employment.
Yeah, feast or famine sometimes.
Exactly. And remember that self-employment tax, that's a significant financial hit compared to having an employer pay half. Plus, all the administrative stuff, invoicing, chasing payments, bookkeeping, marketing yourself.
It's running a business, basically.
It is. And some people find it isolating, missing the camaraderie of a workplace. So it really boils down to a trade-off. Autonomy and flexibility versus security and benefits. Often, the business's financial advantages translate directly into less security for the worker.
It really highlights the different perspectives. You mentioned the legal landscape is evolving. What are the key shifts happening right now that people should be aware of?
Well, that DOL final rule from January 2024, effective in March, is the most immediate big change, reinforcing that totality of the circumstances test under the FLSA.
Right, the broader test.
But it's already facing legal challenges, so its long-term future isn't guaranteed. Politics and court rulings could shift things again.
Oh, yeah, fluid.
And speaking of courts, the Supreme Court decision in Loper-Bright in June 2024, which overturned the Chevron doctrine.
That could be huge.
How so?
It basically means courts might give less weight, less deference to how agencies like the DOL interpret laws. So how courts apply that new DOL rule or future rules could change significantly. They might scrutinize the agency's reasoning more closely. Interesting. So potentially more power shifting to the courts in these interpretations.
Potentially, yes. We're also seeing that steady trend of more states adopting stricter tests, like the ABC test. That seems likely to continue.
A tightening at the state level.
It appears so.
Yeah.
And you constantly see litigation, especially involving big gig economy companies. Those cases keep pushing the boundaries and refining how these tests are applied to modern work arrangements.
So the overall direction seems to be towards
stricter scrutiny, I'd say. Regulators and courts seem increasingly focused on ensuring workers who function like employees actually get treated like employees, with the corresponding protections and benefits. But the path forward is still being debated and litigated intensely. It's definitely not settled.
Wow. Okay, this has been incredibly helpful in mapping out such a complex area. To wrap things up, what are the absolute must-remember points for our listeners from this deep dive?
I think the biggest takeaway is that getting worker classification, right, employee versus independent contractor, is critical. It's not just paperwork, it has major legal and financial consequences.
Don't underestimate it.
Absolutely not. Businesses really need to understand the rules, federal, state, IRS tests, DOL tests, and they need to apply them diligently, looking at the actual relationship, not just the contract.
Document everything.
Yes, document the assessment, the factors considered. And given how complex and changeable this area is, don't hesitate to get expert legal advice if you're unsure. It's an investment against potentially huge liabilities.
Sound advice. Proactive and informed is the way to go.
Definitely.
All right, it really is a regulatory maze, but hopefully we've provided a useful map today. So here's a final thought to leave you with. As independent work becomes even more common and these legal battles continue, what fundamental changes might we see shaping the future of the employer-worker relationship here in the U.S.? Something to think about. Thanks for joining us on this deep dive.
Thank you, viewers, for watching. If you found this video helpful, don't forget to hit that like button and share it with your colleagues. And if you haven't already, make sure to subscribe to the channel by clicking that subscribe button below so you never miss out on valuable insights. I'm Brian Edmonds, signing off. See you in the next one.